Hello, everyone. It's such an honor and a privilege to be here. Um, to briefly introduce myself, I've worked in private equity and I'm currently turning around AlMal investment company, which is a 40-year-old Kuwaiti investment company. I also am on the board of a VC in the US. I would like to turn it now to our panelists to briefly introduce themselves.
Okay, I'll start. I'm Asaad Salhab, the Senior MD and Senior Operating Partner for Gulf Capital, which is one of the top alternative investment in the GCC and the MENA region. Walid?
Okay, or I could start, yes. So good morning, good afternoon, everyone. This is Hisham Gurg. I'm the CEO of Saeed Group and the private office of Sheikh Saeed bin Ahmed Al Maktoum, a member of the royal family of Dubai. And we're investing in mostly Series A companies. And in our portfolio, we have about 72 companies at this stage. Thank you.
Hello, hi, my name is Walid Majdalani. I'm a managing director focusing on the investment activities of Investcorp in the MENA region. Investcorp is a 40-year-old firm focusing on alternative asset manager, and we invest from private equity, real estate, infrastructure, credit management across 3 continents.
Good morning. My name is Eyad Ramlawi. I am the managing director of Alturki Ventures and vice president in Alturki Holding. Turkey Holding is a conglomerate based in Saudi Arabia. Has been operating in the kingdom for the past 40 years. Happy to be with all today.
All right, I will jump right in and I will give everyone around 90 seconds to respond, and I am timing this. So I would like to start with you, Walid. In terms of the portfolio you have in Investcorp, if you can just walk us through how your firm is reimagining its business model to ensure portfolio resilience.
In terms of discussing this question in the middle of the pandemic, I think it's an indication of how things have gone, and especially in the MENA region, where every year there is some sort of crisis of some sort. So today, pre-COVID and post-COVID, any portfolio company who has a chance to survive needs to be able to be agile, needs to be able to take advantage of adversity, and it needs to be quite up there when it comes to digitization. Now, with hindsight, these are easy things to say, but when you look at portfolio companies, especially the ones that we invest in, where they've been quite established for 20, 30, 40 years, for every cycle, there's a need to make sure that there's quick decision-making, quick changes being taken, making sure that new business opportunities, which were not part of the initial business plan, are looked into just to take advantage of the environment that they are focusing on. And the more successful ones and the ones who stay for the next 40 years are the ones who are able to cope with these and act upon them in a relatively fast manner.
I just have a quick follow-up. And while you guys were faced with COVID, would you say you changed your strategy? Did you, for example, start the pandemic with a specific allocation and change midway?
Yes, I mean, the strategy is not a static thing that you put it on paper and then you execute no matter what. Decisions have to be taken to change it. The direction of travel is the same, provided the business model is sound, but the time it takes you to execute on it and the action that you have to take is what changes along the way. But from a direction perspective, it's very much trying to focus on cost optimization, focusing on organic growth, focusing on, in the case of COVID, of course, employee safety and making sure your ecosystem is such that everyone is safe and sound. But the bigger picture is still the same. It's a matter how to get there.
Asaad, I have the same question for you. in terms of reimagining your business model's resilience. How did you deal with the constant uncertainty that COVID presented to your firm?
Look, I think COVID has basically, as Walid said, accelerated things rather than change strategies. Remember, we're at an era and time where our target consumers and audience are basically the young generations and the millennials and so on, and they're very tech savvy. So for us, reimagining the business model, as you asked it, is all companies need to be technology enabled, and that's both internally and externally. You should have a technology angle to your offering, to your product, to your business that people can interact with and work with. And then also internally, amazingly, what technology is bringing in terms of processes, simplification, speed, automation, and so on, which brings in productivity, brings in enhancements, brings in efficiency, and that all reflects in your speed as well as into your cost. And the other thing is also, as you said, it is globalization. With the internet and the social media, you know, the world is at your fingertips, and everything is happening and you know it immediately. And the trick that we always try to balance is you need to be ahead of the game by figuring out global trends, but don't forget about the local requirements. So globalization with the local twist is very important because you're catering to your local markets. So if anything, I think these are the two main ones that we look at right now, and we're trying to do more of across our portfolios.
Great. I would like to move to Hisham because you might have a unique perspective on this. In terms of Corona, COVID-19 hit, several companies. It might have hurt some of your portfolio companies. So in terms of viewpoints, what measures did you take to ensure that you have the most unique value creation strategies?
Well, obviously with the pandemic, it was a shock for everyone, and I don't think anyone was prepared for it. So for us, the good thing about our portfolio, it was already very diversified, and a lot of the companies we invested in were in the tech space anyway. So when the pandemic happened, it didn't impact us a lot. However, our retail business definitely got impacted. So we made sure that whoever was not digitized became more digital. We increased communication. We stayed close. Companies that were struggling financially, we supported them. So we just had to react very quickly and rescue those who needed help just dealing with the pandemic.
Eyad, same question.
So for us, to be honest, the Corona actually did us a favor, pushing our portfolio companies, and here we're talking about the operating businesses. So we would like to look at our portfolio in two parts. The operating businesses, that the ones are on the ground and we are responsible directly for those businesses. The wholly owned subsidiaries and joint ventures, and then we have the investments under Turkey venture and the private equities, where we play more of a governance role. But mainly for our operating businesses, basically it pushed everyone out of the comfort zone to start thinking, what is that digital transformation that everyone is talking about? So it's not only the ERPs of the world, it's not only the digitization, it's also the engagement with your supplier and customers. It is your engagement with all your stakeholders. So I think it did us a favor, and we acted on it, a year ago, and I can tell you that many of our businesses is showing progress. We're not there yet, but there are a lot of initiatives to push for that direction.
I think the pandemic has accelerated the investment ecosystem overall. And what we have seen lately is that governments have been investing heavily as well. And my question, panel, is, in your opinion, what has been the impact of government entities investing in the PE and VC ecosystem? I just want to understand from you if you think that has been beneficial, if this has been negative, how it has impacted your company's strategy. I'll start again with Asaad.
Look, I think governments coming into the spectrum is a good thing, because now you've got a lot of powder coming into the investment world, and that's a good thing. Yet we need to realize that there are limited deals. So just coming in has put a lot of challenge, because the challenges as we see them, the government's coming in has increased the expectations on valuation, so it makes it a bit more expensive to do deals, as well as challenging for the private sector. The more important for us, those challenge is they compete with us on talent. On any portfolio that you hire or you want to do, you want local talent to be there to lead the drive for you. And when the government is head to head with you on talent, they're competing on talent, that makes it a bit difficult. Also, usually the government ownership of companies restricts the competitive environment a bit. So that's another element that needs to be taken care of. I guess these are the main challenges that we see, but it's a good thing to see them in the market.
Walid?
Overall, the impact of government entities in the PE ecosystem, if you look at the pulse of the market, are the small and medium enterprises. The number of SMEs in Saudi, for example, has grown from 450,000 5 years ago to 600,000, and that's a sign of growth. That's a sign of the government putting money into the system, and that's a sign of any market trying to become developed market and developed economy like other parts of the world. I think what Asaad mentioned, it is true that environment creates competition. From my perspective, it's less competition on deals and opportunities, because I think the value add, the experience that each of the esteemed panelists have with number of years of experience under their belt and what do with portfolio company, this is not something that can be started, one day and use that business, especially in a part of the world, need a lot of holding process across many value levers, and that will take time. Government entities to think in the same mindset as private equity. I think where the competition is for sure is on talent and trying to bring and attract local talent. Today, if you're a young Saudi, for example, who wants to go into the PE industry, working for the government or semi-government entity, that has a different cachet from working for a private equity shop, and there for sure we see that going forward. But overall, I think the way the ecosystem is growing in the Middle East in particular, directionally, this is a net positive for the whole industry.
Hisham?
I second Walid and Asaad in their opinion. It has been very positive for governments to enter the space. Especially, it fueled the growth of some of the companies that needed the strong capital that was brought for government. The other thing is they had an impact on regulations. So when companies required a fast change of regulations, government investors have been able to add value from that perspective. The negative aspect is sometimes slow decisions from their side, especially if they sit on a board. Usually they have to not make a decision on the spot and get back. And sometimes you have the wrong people sitting with you on the board, not having enough business experience to make fast decisions as the rest of the private investors would do. So, it's positive and negative at the same time.
Sara? Okay.
Yes,
Sara,
Eyad, can you hear us? Oh.
Now you're back.
Yeah. Well, basically nothing much to add. It's basically the gentleman addressed the valuation issue where, valuations are going up, and then, there's more capital in the system, which is great, fueling startups and companies in the region, creating jobs, which is amazing, and allowing for improved customer experience, which is also contributing very much to the economy and overall vision. Talking here about Saudi Arabia. But there is also one important point, then there are opportunities for partnerships. And we've seen that in different examples where, I think governments or semi-government entities, who are investing, they would like to see well-established companies with experience on the ground to be their partner and trying to build something together as a consortium. So that's something that could create also more opportunities in the near future.
I want to ask you, Eyad, even though you have been the last speaker, in terms of a corporate creating value out of the core businesses they manage, how do you feel about this approach, and what approaches do you think corporates can take to create value?
It's a very interesting question that we keep, discussing every year. For us, we'd like to look at ourselves as a private investor that manages, a private equity portfolio, and hence, the concept of value creation is extremely important. But not only, in the numbers or in the financial aspect, but also how do we impact society at large at the end of the day. I think working actively with the companies is extremely important, but also to try to define that fine line between being engaged without putting your too much of nose in the operation. Because at the end of the day, if you have the management that have the right expertise, they know where they should be heading. And they should build the organization to be resilient, and they should, at the end of the day, address the value creation, which value creation is basically something that becomes valuable when you are addressing a problem at large. And our job is to make sure that those companies continue plan for the future, not for the short term. And it's a very interesting discussion. How to get that formula right is extremely important. You cannot push too much, you cannot stay away. But at the end of the day, we have to align on overall goals, short term and long term. So it's the alignment between management and corporates at large.
I think I want to ask a question that both encompasses this one and a previous question I had. If you were to compare between how governments that enter and invest versus private companies such as Investcorp, is family offices such as the office of that Hisham is managing, and Eyad. What different perspectives are added to each company if you are going to address it this way? I'll start with Hisham.
And I think with family offices, usually the values of the family and the direction for the family has a lot of impact on the decision making of what type of business to invest in, and whether it's within the region or out of the region, whether it's Sharia compliant or not. So we're limited, or I would say restricted by those elements. Maybe in other private sectors or government, these elements are not there.
Asaad?
Look, in terms of, I'll do it on 2 points. First, on looking at investments, as Hisham said, each PE has their strategy of what to invest in, what not to invest in, what sectors, what regions, what industries, and so on. And it depends on the expertise you have and the future that you see. But I'll step back and look at it, what you said, between like Investcorp and Gulf Capital or family businesses. What do we bring to the table together on that? And I think I don't think we differ in what we deliver, because we're all going after SMEs and we want them to grow, and we want to grow with them. That's how we get returns to our investors. And that goes to your initial question that you tackled with Eyad. We bring in institutionalization. Usually we take SMEs that are either family owned, privately owned, and they want to grow. To grow individuals is a recipe for potential failure in the future. So what we bring in is institutionalization, these things, right organization structure, right building. You bring in governance, you bring in oversight, you bring in your network of expertise that can help them to grow different sectors and different areas. You bring the network so that they can grow organically or through bolt-ons and acquisitions. So these are what I think family businesses, investors, as well as alternative investments, we both do the same thing, the same direction. Maybe we do it differently in the tactics, but the overall is relatively the same. At least that's my humble opinion.
I'll move to Walid.
I mean, from a value creation framework perspective at Investcorp, we've been honing those skills for the past 40 years. So we've bought and sold more than 200 companies in the asset class of the globe. So over the years, there have been lots of lessons learned, do's and don'ts, and what have you. And basically, irrespective where you invest, first of all, you need to be convinced as Investcorp, as an investor, that you can really add value, because capital in general has been a commodity, especially in this part of the world. So if you want to compete, you want to compete on the competitive edge that you have. And the competitive edge that you have is being able to, one, from the time you do due diligence, even before you acquire a company, identify the areas of focus and try to revisit them every so often to make sure they're on the right track. Institutionalization, what Asaad talked about, is definitely something that's required in this part of the world. But also, when you look at growth, growth can come organically and come inorganically. And this organic growth, taking a family business to acquire either an adjacent business in a different geography, or acquire in the same geography a new business line altogether, this is something that investors in the private equity space can definitely help to analyze and try to be able to focus on. But at the end of the day, what you're trying to build is an institution which has been there long after people are gone from the existing management. So you're not building a 5-year or 10-year plan, you're building something for 40, 50 years. And it's quite important to have the processes in place to ensure continuity and to have the right talent available there for the foreseeable future.
Eyad?
So, family offices, I think they are evolving, and we're seeing, huge amount of changes around us. I mean, talking here about Saudi Arabia. So in the past 10 years, I've seen, companies going through different cycles of changes where they're focusing on talent and basically emerging out of the concept of family business and, managing as an investor and looking at value creation and looking at opportunities to enter and exit. And it's not a static portfolio. It is, for us, I think we're out of this long time ago. We would like to see our companies become champions. We'd like companies to become very attractive for other investors. We would like to join hands with others. So things have changed. I cannot generalize on all family offices, but I can tell you from where I am right now, many of the family businesses around us are thinking the same. But it's no competition with investment bankers and the likes of Investcorp and Gulf Capital. They have the experience, number of years, maybe more resources. But I think what we would like to see, more joint efforts in the future, where all these expertise in the region to act together, to maybe deliver on one deal or any successful story in the future.
Last question to the panel, and this one I'm definitely timing. I'm going to give you 60 seconds each. Culture is a big thing in companies, company culture, values, and that plays a big part in value creation. How do you, as an investor, embed culture in a sustainable way to enhance collaboration, productivity, and innovation into your portfolio management companies in a way that it can help that company not only derive value for your shareholders in the short term, but to continue to grow into the long term? I'll start with Saeed.
Okay, for us, this is the most important. Organization and people are the cornerstone of whatever you're going to deliver. And this is why you look at it as three elements. One, you need to align interests between you and management and the team so that they realize that they have a stake at the exit. And actually, it will help them to also go continuity beyond our lifetime of holding, because they're going to continue with that company. So alignment of interest through different programs, profit sharing, management incentive, whatever it is one. The second thing is, remember, our target employees and management are the young generation and the millennials. And these guys, you need to make sure that you have a sense of belonging in the company. So you work heavily on the culture, that they believe that they're productive, doing something, and they have a sense of belonging. And the last third element important is the ESG element. This is a generation that wants to give back, and they're committed to their community and to the universe. So they want environmental behavior, they want sustainability, they want governance, they want inclusion, they want diversity. So all these are elements to make a difference in the workplace so that people feel that, yeah, this is the place I want to be and I want to continue, and I'm working hard to make sure that I deliver on their value creation. So these are, for us, are the three elements we work on to make sure that we...
Yeah, I mean, 60 seconds will not do this question justice, but I can tell you in due diligence, we spent a significant amount of time sitting down, understanding the values of the counterparties, the culture, seeing our culture, seeing if there's a fit. And this is not talking about EBITDA and revenue. This is more talking about, you know, are we able to continue together? And for the rest is focusing on productivity, focus on ESG, but more importantly, there's a culture in this part of the world where loyalty is viewed more favorably than competency. And what we try to do in our portfolio company is we surround ourselves either from existing management or bringing in from the outside, competent people with KPIs that are suitable for all other shareholders, so that all shareholders plus management root in the same way. And the KPIs are not only financial in nature, but also is to contribute back to society, which, as Asaad said, it's something that becoming more and more a requirement to do business in this part of the world.
Hisham?
I think one of the most important things that we always do is spend a lot of time with each of the company's team, and we make sure they spend a lot of time in our head office as well for at least a month or two. This way, we ensure that a lot of the way we like our team to be managed and the culture that we'd like to have in our head office is transformed to the startup or to the companies that we manage. And so far, that has worked very well for us.
And last but not least, Eyad.
I can also, share, maybe examples where we walked away from, great deals because we couldn't see, the culture, something that, can be merged with our own. We also, put that culture a priority against, financial returns, because it's extremely important for the shareholders. And to be honest, we spend significant amount of time on making sure that it cascades, down to all the companies. And in every meeting, we remind ourselves about why do we exist? What is the value we bring to all our, stakeholders, not only to the customer. And it's extremely important to basically think of the ESG or, at large, and the society that is around us in specific. So this is, basically a bit of how we think in our group.
Thank you.